Good morning, good afternoon, good evening, traders from across the globe. Welcome to the 1466th edition of Short-Term Trading Live with Oscar. Good evening, traders. This video is not going to be about such short-term trading, even though it'll help you out for trading on Friday, May 6th, 2016. This is the 1466th video. These are very educational videos. Please pay attention to what I'm about to show you. Try to make use of the information you are about to see. Traders, as we know before we get into this, futures trading is extremely risky, causes substantial financial loss, is not suitable for all traders, should not be traded by anyone that cannot afford to play the game and doesn't recognize the risks behind it. Always place your stops. Let's get moving. German DAX on the weekly, traders. Look at this chart. You've seen it before, but let me explain to you because it's very interesting. I've shown this to you in countless videos, but look at it again. This is a weekly chart of the German DAX. So each one of these black bars represents one full week of trading, 5 full days. This line goes back even further, but what fits on the screen since 2011, this support line has not been busted. Not even close here because it's a weekly chart, so that's 150 points. So it hits in 2011, bounces along on a nice bull market, doesn't get back to it again until 2014. So that's all of 11, 12, 13, and 14. 4 full years it doesn't get back there. Then suddenly it rallies up, it comes back down and smashes into it again in 2015. Not once, but twice. 1, 2, these are weekly charts. And then it goes back up, and during 2015, it breaks this line. Drops down, 2016, here we are. And in 2016, you've spent almost no time above the line, and look where we are right now. That's not as healthy of a look as the rest of this chart has been. You agree with me on that? What's going on here? This is not supposed to be happening, in my opinion. I don't know what's going on here, but it does not resemble the rest of the ride. So that's an interesting thing for us to look at, no doubt, right? Let's go look at the daily of the DAX now. You drop to a daily, and what you'll notice is the DAX is breaking down on something it doesn't usually break down through. So you can see that it's in this channel / Andrew's pitchfork / whatever you want to call it, and it's bouncing smartly around this channel, and it starts here, and it, well, actually the channel, I guess you could say, starts here, and it breaks down, and it rallies up, and then it breaks back down. You get this nice runaway gap. Boom, it runs up, just about hits the top of the channel. Now that it gets back down, something different happens. It breaks the line. Boom. Not only that, but look, it's starting to trend in this channel now towards the downside. Look at the way this channel is descending as opposed to the ascending channel you see here. Descending channel now. So something interesting going on in the DAX. Let's move over to our wonderful ES market. The emini S&P, traders, take a look at this one. This is an interesting chart for us to look at. Let me get it into focus for you. A major support / resistance line being tested. And again, you've seen this in many other videos. Here is your major line. It can't get above, can't get above, can't get above, does get above, rallies up, comes back down, plays around for a while, but look where we are now, 3 full weeks below the line, and again, a descending channel, if you will, is forming. So interesting what's going on here. Let's move out to a weekly of the E-mini S&P. And boy, does it get interesting now. Follow me with this, traders, because this I've been showing you for weeks on end, and now it's starting to happen. E-mini S&P. Follow me with this chart. Many moons ago it is now, because it was during December. I did a video called "Oh Shit" in plain English, and I put it out for you, and I said something is absolutely wrong with our beloved S&P, and that was on this night, and the very next day, a monster crash takes place because we started at about 2075, and we dumped all the way down in 3 quick weeks to 1799, 1800. Now that was a fantastic haul, and from then forward, actually from November of last year, right around here, I was starting to say there's something wrong with our market. I removed do not fall in love with the upside off the board, and then we cracked, and then I started to write do not fall in love with the upside at all. You know, so do not fall in love with the upside is what's on the board now, and it used to say do not fall in love with the downside. That basically means on big rallies, don't fall in love with this. That leads to this big up move. So now I'm talking from there to here. That leads to this big up move, which then basically turns into a big head and shoulders formation. Left shoulder, head, right shoulder, and then the market rallies out of the right shoulder, and this is something that's only been known on this planet by me. It's an Oscarism called the head test. It does not exist elsewhere, traders. I have revolutionized the trading industry who uses analysis with this thing called the head test. It's not in any books. So anyway, this Oscarism of a head test tells you that after the left shoulder, head, and right shoulder is made, in many occasions, you will have a little rally, and that rally will take you up to what I like to call the head test area. And if you fail at the head test area, you've got a problem. So it rallies up to the head test area, and I say, oh no, this needs to be monitored. And these videos are coming out for you night after night or every few nights. And look at what has happened since then. Yes, it needed to be monitored because now we're starting to drop. So interesting, we do have the head and shoulders. It does do the head test, and the head test starts to fail. These are all things that we were discussing for 12 to 14 weeks already. So it's starting to happen. This is important. Keep an eye on this. So that's your emini, S&P, and your DAX. Let's go look at your NASDAQ chart. Now this one, I want you to pay attention. It's not as difficult as it seems. There's a lot on this chart, but follow me because it's really not that difficult. So let's now drop an average onto this chart. I think you'll like what you're going to see. So we'll drop an average on here, and what we're going to show you is this. We hit the average, and this goes on, by the way, for a long time before where we are now, but let me just show you the last couple of years. You hit the average, you rally up, and what happens? A new high, NH. Hit the average, NH, new high. Boom, there it is. Back to the average, or just about, new high. Back to the average, new high. Get through the average, no problem, new high. Down to the average, new high. Down to the average, new high. Every time. Down to the average, new high. Down to the average, new high comes. Down to the average, new high. Breaks the average severely, but a new high comes. Down to the average, messes around for a while, slams underneath, no more new high. Not the same result. No new high came this time. All of this has been given to you in the charts for weeks in these videos, so we're just going over what we're seeing and recognizing that now it's starting to happen. No new high gets made in NASDAQ, and look what happens here. When's the last time you've seen this thing below the average? So often. Big time below the average, big time below the average. No new high. Different. Right? All of this was new highs. No new high. That, my friends, tells you something. So, different result, no new high. Now we're getting below the average. And in reality, this is nothing more than a head and shoulders that had a head test which failed. Watch this. That is a left shoulder, head, right shoulder, head test, failure, and break. If you think that this looks interesting, let's look at the daily. NASDAQ. This is on your daily. Below, what you're going to find is the 200 bar moving average. Let's now switch out some averages here. Now let's go look at the 200. You are below the beloved fund manager's blue light special. Below the 200 bar moving average, and look at the size of this channel we're in. Straight down, descending. This, my friends, is not all that good for us, I assure you. So now we're going to go and take a look at something that I find, at least I think, is very interesting. It's another look at this NASDAQ. Look at this chart. Same chart, went out to a weekly. Traders, if you like what you see here, I offer live recommendations in my live trading room. These recommendations come out as the market is getting into trades, as the Omni is getting into trades into the market, as the Omni is getting out of trades. I send immediate instant signals with audio alert, and it tells you exactly what to do. You come to livewithoscar.com and click the link and sign up for those recommendations if you like what you see. But let's move forward. So here, something very interesting. NASDAQ weekly. Left shoulder, head, right shoulder. It runs up and does the head test and fails miserably. Fails miserably now below OTAPMA, the Omni Trading Academy's proprietary moving average. When's the last time you seen that? This is not good. So I'm showing you that the markets are starting to react to this head and shoulders I've been showing you in videos for months now, about 3 of them. And does this mean the market has to go down? Absolutely not. Unequivocally not. Do not think that this means the market has to go down. Nothing has to happen. But I am showing you evidence, compelling evidence, that should point us all in the same direction for now, unless something changes. So it doesn't have to go down, but it didn't have to go up and have a head test, which it did. It didn't have to fail at the head test, which it did. It didn't have to start getting under my average, which it did. None of this has to happen, but that doesn't mean it won't. I think it will. That's why I show it to you in video after video. So these are really, really interesting charts. Now we're going to basically go back and take a look at, let's go here, let's remove the average, and let's go take a look at the gold chart, because I think you're going to find this one quite interesting as well. Traders, why is this happening in the emini S&P, the NASDAQ, the Russell, you name it? Because gold does not act like this for no reason. Where have you heard this, kids? I have been telling you this since, I don't know, November, December, January for sure. I started really letting you know that this is not right. Gold does not act like this for nothing. Then boom, it runs up, makes a massive bull flag, breaks out of the bull flag, makes a secondary bull flag. Why? Why would this happen? Because of the same reason that I've been showing you those head and shoulders charts. Something is amiss. Something's going on. Thank the Lord you know me, and I can keep you in tune no matter what they say out there in talking head television, no matter what the trolls may write. Stay focused on what you see in the charts, and I assure you, you will have a roadmap to whatever is coming next. Now, remember, what's going on? Well, this one is really important, and you've seen it already. This DAX is important right now because if the U.S. starts to falter, Europe's in trouble. You know what I'm saying? They haven't even gotten into their recovery in half swing, let alone full swing, and they're starting to falter. Let's go out to the weekly in the DAX once again. Traders, this is not supposed to be going on, all right? You've seen it. Look, we can take this rectangle, move it bigger across the whole spectrum of this chart, and you're not supposed to be where you are right now. This is getting interesting. So, okay, again, does it have to go down? Absolutely not. Should it go down? Yeah, according to analysis, absolutely. And again, no backseat driving here like a lot of these so-called pros out there have been telling you it's going to the moon since January, when I've been saying these markets are having some serious problems and gold doesn't do this for no reason, and you pay attention and you listen to me and I'll keep you in tune. Well, check it out, kids. Was I lying to you about that? I am very good at what I do. I also teach classes that will teach you how to come up with the exact same analysis and the same Omni recommendations that I offer at my site every day. I teach this at OmniCamp 2.0. Traders, there's an OmniCamp coming in June. There are only 2 applications left, 2 seats left open. If you would like to be one of those 2, come on down to livewithoscar.com or simply click this link right here. Fill out your OmniCamp application. I'll qualify you for a seat. There are only 6 or 8 of you max coming out. There are only 2 seats open at this point in time. If you'd like to join us, make sure you click this link and fill out your application. It's coming up in 6 weeks. Traders, time's ticking. If you'd like to just hang out with me in my live chat room and talk about the markets, look at charts, and get the recommendations, click this link down here, and that is your link for livewithoscar.com. Traders, thank you so much for watching this video. Thank you for all the support over the years. I love my OMNIacs. The support is fantastic. And I love being in my chat room with you cats every day. I hope this video helps to keep you in tune with what's going on out there. And always remember, keep your emotions out of trading. If you come to OmniCamp 2.0, I will absolutely help you fix that problem. Barring that, remember to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, rock and roll. I'll see you all from Washington, D.C. next week. Have a great week. I'll film from there. I'll do Omnis from there. I'll let you guys take the trip with me and my boy. Class trip, 75 kids going across the country to go visit Harry Reid. Make sure you've got your rotten eggs, children. I'll see you all at livewithoscar.com.